the bull case, the biggest point of the bull case is that we're not in crisis yet. We saw the first signs, and to me, there's nothing more bullish than we're not in crisis yet,
Mhm.
because it gets people thinking, it gets people moving. Let me just share my chart here for here. So, okay, so if we take a look at NVIDIA, so there's a bunch of these assets that had these massive rallies. So this rally up over here was like something like 30%. I mean,
Mhm.
did you see that? And it's
For a
not
mega
just
cap
there.
company, that's incredible.
That's right. So we were talking about on one of the previous episodes that when we get down to the yearly, well, what's my yearly average? That's to be where I always look for the first major bounce and potential for support, at least for a trade or if you're going to go in long. And that's exactly what we had. So it's a natural bounce from over here. We had, if we take a look at uh, what was the other one? Netflix. Pull up real quick. Nice bounce, 11%. But there's actually been quite a number of stocks that actually rallied more than you would have anticipated in such an environment. Um, Forgive me, I had a whole list here, but we'll touch on that in the smaller news segment. But we got massive jumps here. If we actually take a look at HIMS, you'll see it's like got down to the low end of its range, right? If it, for HIMS, I'd be looking for a bounce around here, and things seem to have settled down. To me, this is pretty bullish to see some of the stock.
Yeah, a fair analysis on the option side as well. And even just looking at technicals, we're starting to move over the shorter term averages. We're starting to see some confirmation that there could be a bull case to the upside. I'm definitely very curious to see how next week shakes out.
Right. What were you saying before about the some other markets abroad are actually doing better than expected or than one might expect?
Well, sure. One of the other trades that was circulating on Twitter was just trying to look at emerging markets. As the dollar starts to fall, you start to wonder how things are going. And I've got my chart of all of my different overlaid ETFs and different assets here. Um, One of the things that I look at is the Eurozone ETF as well as the Chinese market ETF. That's EZU and FXI. And interestingly, year to date, those two ETFs are now the second and third best performing assets among all the ones that I look at. This is all the sector ETFs. Gold is up 21%. Um, uh, uh, Consumer cyclicals is up. Value is slightly down. Treasuries are slightly down. Financial sector is down about 3%. Obviously, the areas and sectors that took the worst hits are the technology sector, the Qs, growth, that kind of stuff. That's all down 10 and 15%. But to find the Eurozone and Chinese markets up is actually really quite interesting to me, especially since they were starting to fall with the rest of the market over the last week, but they rallied back over this week. So I think that's some indication that the markets are starting to start to rotate into emerging markets.
Interesting. For China, is it so over there? We're looking at the performance relative to each other, right?
Yeah, this is a percentage overlay. So this is just looking at year to date and over all of these assets and just the percentage return.
Okay, so they might still be down for, let's say, the year or whatever, but they're showing signs of bouncing back up and like revival.
Well, year to date, those two are actually up. So FXI is up 10%, and Eurozone ETF is up 11.38%.
Okay, so what do you think here about the dollar falling down below 100? Which, I mean, I'm so surprised it actually got there.
That was concerning. Obviously, 100 has been our support level for a long time now. We've seen it confirm as early as like July 2023. And the last time we've been down in this territory was obviously 2018 and both COVID in 2020. So, not exactly very promising. I'm again wanting to watch the dollar over the next week as well to see if we continue below 99.